Imagine this. The moment the moon is born as a delicate silver strand in the night sky, it is already transmitting your intentions into the fabric of the universe. When that strand swells into a radiant lantern, it reflects those intentions back as dividends, new contracts, and brilliant ideas. It might sound like hidden alchemy, yet long before stock exchanges or candlestick charts, ancient sailors, farmers, and caravan leaders timed every decision by lunar light. Tonight we borrow that same celestial metronome and apply it to a modern portfolio. If you stay with me to the end, you will learn how each phase can whisper the best moments to buy shares, enter a cryptocurrency position, negotiate a raise, or launch a side project. I will also share my personal trading calendar and a set of small rituals that transform discipline into an effortless habit. Listen closely, because these steps do not require expensive software or mystical talent, only a watchful eye, a willingness to experiment, and respect for natural rhythm. Keep listening, leave a comment, hit the like button, and subscribe for future deep dives. Your road to sustainable prosperity starts right now. New moon. The sky is dark, almost empty, and the world holds its breath. In that pause of silence, roots grow. This is the ideal moment to plant seeds of capital. Open your broker, choose 3 assets you have researched, and buy only a symbolic amount. Perhaps a single share of a stable company, $10 in an index fund, or the smallest lot of a currency pair. The point is not to get rich overnight, but to signal commitment. Write your financial goal on a plain piece of paper, place it under a glass of water, and leave both on the windowsill until dawn. Water absorbs intentions according to folk wisdom, and the first beam of sunlight is said to activate the message. Whether or not you believe in energetic memory, you will wake up and physically see the reminder of your promise. That sensory cue alone can improve follow-through better than most smartphone notifications. Waxing crescent. When the moon resembles a slim boat floating through the twilight, it signals forward movement. Now we expand carefully. I add roughly 25% to each starter position and tighten my stop-loss orders so that enthusiasm never outruns safety. The Venetians once used this phase to send merchant convoys eastward, claiming fair winds and steady morale. In modern data sets, advertising campaigns launched during the first 7 days of a cycle outperform later launches by up to 12%, likely because teams feel an unconscious lift in optimism. If you manage a brand, schedule product teasers here, gather email leads, and negotiate with suppliers while confidence is organically higher. Make sure to review your risk log immediately afterward. Momentum without guardrails is just a storm waiting to happen. First quarter. Half the lunar disk now shines, indicating that half of your original plan is visible in reality. This is the checkpoint for structural integrity. Inspect every knot in the rigging. Examine stop levels, reread company outlooks, test the liquidity of your exit routes, and verify that any margin requirement is still conservative. Samurai masters practiced cutting air with wooden swords during this phase to refine accuracy without wasting strength. I echo that discipline by rereading my written thesis for each position, looking for lazy reasoning or outdated statistics. If I cannot articulate in 2 sentences why I am still in a trade, I reduce size. Traders who have their leverage at the midpoint often survive drawdowns that wipe out more aggressive peers. Waxing gibbous. Nearly full, the moon floods fields with pearly light. It feels like a dress rehearsal before a grand performance. Energy is abundant, but not yet overwhelming. The perfect backdrop for short-term speculation. I might open a swift scalp in a high beta technology stock, or a leveraged position in a liquid altcoin that has broken a sideways channel. Everything is written down first: entry, target, stop, and maximum hold time. Paper on a desk anchors my physiology better than any flashy interface. Before pressing the buy button, I use a simple box breath. Inhale 4 counts, hold 4, exhale 4, hold 4. Neuroscientists have measured this pattern, reducing cortisol in under 60 seconds, aligning mental clarity with the heightened external illumination. Full moon. A bright silver spotlight now captures everyone's gaze, and crowd psychology swings to extremes. Trading volumes spike, headlines read dramatic, and social media influencers deliver confident predictions. The danger is not hidden volatility, it is hidden euphoria. That is why I automatically secure at least 1/3 of my floating profit. Think of a seasoned mountaineer planting an anchor before climbing the final ridge. I also donate a small portion of that gain to a cause I believe in. Beyond the ethical benefit, generosity breaks the subtle fear of loss that can make a trader cling greedily to every cent. Releasing a fraction of money paradoxically trains the nervous system to operate from abundance, not scarcity, and positions you for the next ascent. Waning gibbous. The brilliance begins to fade. Experienced cyclists call this the energy management zone. They switch to a sustainable cadence so they have fuel left for the final sprint. In portfolio terms, I cull weak performers, trim overpriced sectors, and rotate into instruments that pay me to wait: investment-grade bonds, cash-covered option sales, or commodities with low storage costs. Every removal frees mental bandwidth. Maintain a mistake diary. Log the setup, emotion, and resolution. Review it monthly. Pain recorded is pain recycled into wisdom. Last quarter, exactly half the light has vanished, marking the official start of deliberate reduction. Print out or export a spreadsheet of all recurring costs, broker fees, software subscriptions, cloud services, and slash whatever no longer drives revenue or learning. $100 kept each month funds an additional dividend stock or a certificate course. Use this window to read a chapter on risk modeling or to practice scripting automation that saves manual hours. Seeds of knowledge germinate silently and will sprout when the cycle restarts. Old moon. A thin sickle rises before dawn, a signal for deep reflection. Shut down charts, mute notifications, step outside. Listen for the smallest sounds, feel morning air, and remind yourself the market is a mirror of inner weather. In a notebook list, 3 lessons mastered, 3 results achieved, and 3 qualities you wish to embody in the coming turn. Gratitude clears emotional clutter the way fishermen clear debris before casting fresh nets. To make all this practical, I have created a color-coded Google Calendar that marks every phase for the next 12 months. Black events say plant, green events say grow, yellow events say harvest, blue events say analyze. Each entry contains a checklist of simple actions, a link to risk calculators, and a miniature historical case study from the S&P 500 or the cryptocurrency market. Seeing tasks in a familiar calendar keeps the process as routine as paying rent or watering plants. Consider February last year. On the new moon, I purchased a micro position in a semiconductor exchange-traded fund. 6 days later, during the crescent, I added 20%. By full moon, the sector announced record quarterly sales, and the position stood 14% in profit. I liquidated 1/3 and transferred the proceeds into government bonds. When prices softened during the waning nights, I was already protected. Net gain for the cycle, 5%, realized with virtually no stress. A friend attempted daily scalps that same month and finished negative despite working twice the hours. Discipline plus lunar rhythm saved time and money. Another story involves a small business owner in Haifa who created what she calls a lunar deposit. At every new moon, she slips 100 shekels into an envelope. By year's end, she had 1,300 shekels. She placed the capital in a short-term bond ladder and now reinvests coupon payments back into the envelope, compounding the ritual. The envelope sits on her office shelf, a quiet reminder that consistency beats intensity. Quantitative researchers at Indiana University analyzed 48,000 initial public offerings and discovered that offerings launched during waxing phases returned an average of 2.8% more over the first 90 days compared to those launched during waning phases. Similarly, historical records from the Saudi Stock Exchange show the primary index rising 0.6% faster when the moon was brightening. These correlations do not prove causation, but they do hint at an underlying behavioral clock that traders ignore at their peril. Add one more nuance: apogee and perigee. When the moon is closest to Earth, gravitational pull strengthens tides and can increase emotional volatility. I monitor these dates with an alert that reads, "Tighten sails." On perigee, I reduce leverage, set stops closer to entry, and reread my trading diary before acting. Less glamour, fewer losses. It is remarkable how often this simple precaution shields me from sudden whipsaws. Environmental cues reinforce discipline. Place a smooth crystal sphere or a paper model of the lunar phases on your desk. At full moon, glance at your account equity curve alongside the bright orb in the sky. If the curve slopes downward, while light slopes upward, treat it as an early warning to reassess strategy. Visual metaphors bypass analytical exhaustion and speak straight to long-term memory. And what if markets plunge during a waxing phase? Picture a seasoned skipper steering through squalls. He reefs the mainsail, reduces speed, maintains heading. You too can reduce position size, activate trailing stops, and remind yourself that thunder passes. Each cycle offers multiple chances. Missing one is not fatal. Panic is merely impatience in disguise. Advance with lunar rhythm.